The Philippines spends 6% of its GDP on public infrastructure every year. Yet when it comes to energy, we're still bleeding dry. Think about this. Every single day, the nation consumes over 550,000 barrels of oil, but we produce barely 9,000. That isn't a shortfall, it's a full-scale crisis. Gas prices keep climbing. Rolling blackouts continue to hit neighborhoods. Groceries are more expensive than ever, and it's been nearly 2 years since Bongbong Marcos entered office in 2022, promising cheaper energy, a stronger economy, and a better life for Filipinos. So why are families still sweating in the dark? Because beneath our seas lies a buried fortune, over $26 trillion worth of oil and gas reserves. Let that sink in. 26 trillion. That's enough to rival Qatar, more than Brunei, and potentially capable of matching Indonesia's daily output. Yet despite this hidden wealth, GDP per capita is stuck at $3,500, while Malaysia pushes toward $12,000. Why are Filipinas still leaving to clean homes in Singapore while their own country sits on untapped energy that could power generations? Why do millions endure brownouts when salvation lies right under our feet? The Philippines isn't just energy poor, it's trapped, caught between resources we can't touch and politics we can't untangle. Every day, billions of pesos flow out of the country, not for development or growth, but just to keep the lights on. Oil, gas, coal, all imported. And whenever the global market spikes, whether from war in the Middle East or OPEC's price hikes, we are the first to suffer. But here's the tragedy. We don't need to live like this. Scattered across our archipelago are real fields: Reed Bank, East Malampaya, Cadlao, Sulu. Not myths, not speculation, confirmed reserves of at least 6 billion barrels of oil and trillions of cubic feet of gas, enough to light our homes for decades. But they remain untouched, locked away by politics, bureaucracy, and foreign interference. Meanwhile, Malaysia fuels itself with its own oil. Indonesia harnesses its reserves. Brunei built an entire economy on exports. And us? We keep begging foreign suppliers for overpriced fuel only to get blackouts, broken promises, and wasted potential. The Malampaya field, the country's most vital gas source, is running dry. By 2027, experts warn it could be gone entirely. If that happens without replacements, Filipinos can expect soaring bills, crippling outages, and a peso that weakens further under the weight of imported energy. That's not just an inconvenience, it's a national emergency. The cruel irony? The energy we need is already here. What we lack isn't oil or gas, it's power. The political will to extract what belongs to us. Because beneath the calm waters of the South China Sea lies the real prize. Analysts estimate more than $26 trillion worth of oil and gas rests under those waves, one of the largest untapped energy frontiers on the planet. This isn't hype, it's the kind of wealth that transforms nations, the same way energy lifted Qatar, Indonesia, and Brunei. And yet, we're still importing almost everything. Why? Because the biggest obstacle isn't geology, it's geopolitics, China. The same waters that could fuel the Philippines for a century are also the most contested on Earth. Within our exclusive economic zone lie Reed Bank, East Malampaya, and more. International law, including the 2016 Hague ruling, says they're ours. But law doesn't stop warships. And every time Filipino survey crews venture out, Chinese vessels arrive, blocking, ramming, blasting water cannons, or simply shadowing with destroyers nearby. China claims the South China Sea as their own backyard, and that means the Philippines, despite having rights recognized under international law, is forced into hesitation, waiting, bleeding pesos while our energy remains locked under the seabed. So let's call this what it is. This isn't just an energy issue. It's about sovereignty. It's about survival. It's about whether Filipinos will finally take control of their own destiny or remain forever dependent on foreign powers. Imagine this: an ocean that holds enough energy wealth to power the Philippines for generations. Reed Bank alone could provide billions of barrels of oil and trillions of cubic feet of natural gas. Cadlao, Camago, Newfields, and the Sulu Sea, each brimming with potential. Together, they could erase our dependency, slash power costs, and turn the Philippines into an energy exporting nation. But exploration teams are stopped before they begin. Geologists and engineers are forced to abandon surveys because Chinese coast guards push them back. Our government faces a choice: defend our rights or watch trillions slip away while our people suffer in the dark. This is bigger than fuel. This is bigger than trade. This is about whether the Philippines will remain in the shadow of dependency or finally stand up and claim what is rightfully ours. And time is running out. If we don't act, Malampaya will dry, imports will climb, and families already suffocating under high bills will face an even harsher reality. The Philippines doesn't lack energy, it lacks resolve. And if we don't break free from this trap soon, the cost won't just be higher power bills, it will be our future. This is ours. Yet while our leaders debate and the people wait, China builds. On reefs just miles from the very oil and gas fields that could transform our economy, Beijing is erecting military bases, runways, and fortresses. Every new structure rises like a reminder. While we hesitate, they act.
Meanwhile, Filipino workers are left stranded on shore. Drilling rigs remain unbuilt. Natural gas stays buried beneath the seabed. And foreign investors? They're packing up and leaving, because no company wants to risk clashing with Asia's most powerful military. This is no longer just about untapped resources. This is about lost sovereignty, a creeping national security crisis that grows every single day in waters that, by law, belong to the Philippines. But danger is not just offshore, it's here at home. The Malampaya gas field, our single most important energy source, is dying. Experts warn that by 2027, it could be nearly depleted. This one site alone currently powers over 3,000 megawatts, enough to light up Luzon and keep Metro Manila running. Once it dries up, expect rolling blackouts, soaring power bills, factories slowing down, and jobs evaporating. And here's the bitter truth: there is no replacement ready. No second Malampaya waiting in line. No backup plan to pick up the slack. Yet we know exactly where the next Malampaya could be: Reed Bank and other untapped fields, sitting idle while we stall. The Philippines has the engineers, the technology, and even international partners willing to help. But what we don't have is political resolve, or the leverage to push past China's blockade. Every year of delay strengthens their grip. Every month, investors lose patience. Every week, capital flows to other countries. And with it, the dream of true energy independence fades further away. If we don't act soon, the cost will be devastating. Not just higher bills, but an economy throttled by unreliable power. Imagine daily commutes wrecked by fuel hikes, flights canceled by outages, students stuck in the dark mid-lesson, businesses losing millions by the hour when the grid collapses. This isn't a warning for tomorrow, it's already happening. Manila is scrambling. Officials are trying to revive old fields like Cadlao, rushing through service contracts and squeezing the last drops from Malampaya. Private players like Shell and Prime Infra are racing to extract new energy sources. But exploration isn't like flicking a switch. It takes 5 to 10 years, sometimes longer, to move from survey to extraction. Infrastructure must be built. Bureaucratic hurdles must be cleared. And every single step faces political risk. By the time these projects deliver, Malampaya may already be gone. Yes, China's aggression is a serious threat, but time is even bigger enemy. This is a race against a collapsing grid, against an economy that can't breathe, against a global energy market that will not wait for us to catch up. The world is already locking in long-term supply contracts. Nations are stockpiling energy, pouring billions into renewables and securing their futures. While they act, we argue. While they drill, we delay. While they prepare for tomorrow, we struggle just to survive today. Every day of inaction is another barrel left underground, another kilowatt hour lost, another peso drained from our wallets. The Philippines isn't just running out of fuel, it's running out of time. And if we lose this race, it won't just be about higher bills or brownouts. It'll be our children inheriting a country still dependent on foreign fuel just to keep the lights on. It'll be our sovereignty slowly slipping into someone else's hands. Look just across the sea at Malaysia. While we hesitate, they're powering ahead. They built strong state-owned energy firms, secured global partnerships, and attracted billions in investment. They planned not just for today, but for decades to come. And it's working. Malaysia is already evolving into a regional energy powerhouse, exporting fuel, shaping markets, and claiming influence. So why is Malaysia sprinting ahead while the Philippines, sitting on trillions in reserves, is stuck? The answer isn't technology. It's leadership, vision, the courage to see a crisis as an opportunity. Malaysia had a leader who made bold moves, while the Philippines remains tangled in hesitation and fear. And here lies the lesson. The Philippines cannot afford to debate endlessly while our neighbors seize opportunities. The energy crisis is not a far-off threat. It is here, it is escalating, and it will decide whether our nation rises or falls. The question is no longer if we have the resources, we do. The question is whether we'll summon the will to claim them before it's too late. The Philippines is at a crossroads, and every decision from here on out will shape the next generation. We can either keep importing 500,000 barrels of oil a day, draining billions from our economy, or we can finally break free from dependence and use the wealth buried under our own seas. But the clock is ticking. Malamkaya's depletion is not a theory, it's a countdown. Every blackout, every fuel hike, every peso lost to foreign suppliers is proof that our energy trap is already tightening. The only question left is whether our leaders will act before the door slams shut. And make no mistake, the world is watching. Investors are searching for stability. Global energy markets are shifting towards countries that show resolve. If the Philippines demonstrates bold leadership, if we unlock Reed Bank, Cadlao, and the Sulu reserves, we won't just power our homes and factories, we'll attract the kind of investment that builds nations. But if we keep stalling, those same investors will pour their money into Vietnam, Malaysia, or Indonesia, countries already proving they won't hesitate. This isn't just about energy, it's about sovereignty. Because the more we rely on others, the less control we have over our future. China understands this, which is why it has built artificial islands and military bases right next to our energy fields. Every day they tighten their hold, while we argue over permits and contracts. So the choice is clear. Act now or accept a future of dependence, blackouts, and missed opportunities. The Philippines doesn't lack resources, it lacks resolve. And if we find it, this nation could transform from an energy beggar to an energy power. But if we don't, history will remember this moment
as the time we let our future slip away.